Please remember to subscribe to the channel and hit the like button. Have you ever wondered what happens when a gaming giant faces a financial storm? Ubisoft's recent third quarter earnings report paints a troubling picture, revealing a company grappling with significant challenges. And they're really built wide game because we really want to reduce 6 months. And I think the report indicates a staggering 51.8% drop. Over the first 9 months of the fiscal year, Ubisoft's total net bookings plummeted to 944 million euros, a 34.8% decrease. This decline extends to their digital sector, which saw a 33.8% drop and a concerning 33.7% fall in player recurring investment, a key metric for live service games. Despite these alarming figures, Ubisoft's leadership seems to be presenting a more optimistic narrative during investor calls. This disconnect raises eyebrows as the reality of their financial struggles starkly contrasts with the upbeat tone of their communications. Ubisoft's debt situation is equally alarming, and that with a debt to EBITDA ratio of negative 21.1 times, the company is losing money even before accounting for interest and taxes. And this suggests a dire financial health with little hope of profitability in sight. That in a surprising turn, Ubisoft has shifted its focus from pursuing profits to merely balancing their income by the end of the fiscal year. This change in strategy hints at a company more concerned with survival than growth, a significant departure from their previous optimistic outlook. And essentially, and deploy this game. And the process safety studio, it would be a dropped in the middle who could be changing more business. It's still new effective managers, and this proactive approach to cut expenses reflects the urgency of their financial situation. Investors observing these trends might feel like they're watching a plane in distress heading towards a fiery crash. The contrast between Ubisoft's conference call and the reality of their financial performance raises questions about transparency and investor trust. During the call, executives touted the success of upcoming titles like Assassin's Creed Shadows and Star Wars Outlaws. However, the reality is that pre-orders for these games have fallen short of expectations, contributing to the company's declining revenue. Ubisoft's attempts to spin their sales performance positively seem to border on deception. They claim that their games are well received, yet they fail to disclose official sales figures, leaving investors in the dark about the true state of affairs. The company's staggering debt crisis was highlighted during a Q&A session where questions about their ability to meet obligations were met with vague promises. This lack of clarity raises concerns about Ubisoft's adherence to financial regulations and transparency. Under European market abuse regulation, companies must avoid misleading statements. If Ubisoft has failed to disclose its financial struggles while painting a rosy picture, they could face serious legal repercussions as Ubisoft clings to the hope that Assassin's Creed Shadows will turn their fortunes around. One can't help but wonder if they are ignoring the reality of their situation. The game has faced criticism for historical inaccuracies and poor creative choices, yet Ubisoft remains optimistic. It's almost comical how they believe this one title can erase their financial woes. It's like a restaurant serving bad food, asking for more money to buy fancy plates instead of fixing the kitchen. In conclusion, Ubisoft's latest earnings report reveals a company in crisis, relying on illusions rather than sound business practices. As we await the release of Shadows, the reality of their financial situation looms large, and the potential for bankruptcy becomes increasingly likely. With that said, thanks for watching, and until next time.